Good morning. Welcome to IG's early morning call. It's the midweek trading session, Wednesday, the 15th of February. Let's take a look at the headlines as we wait a lower start across the European markets at the beginning of today's session. That being said, in the last 24 hours, in fact, on the 24-hour markets, we've seen the FTSE 100 break 8,000 for the very first time. New record highs here in London for the benchmark index. This comes as UK inflation is seen down again for a third month in a row, with the consumer price index coming in lower than expected, but a long way off from the Bank of England's 2% inflation target. And in amongst the earnings today, we've got numbers out from DNLM, we've got numbers out from Glencore. One of the headlines, Barclays, fourth quarter, the investment operations very much disappointing in the numbers this morning. We'll take a look at the figures. Take a look at what's happening with the markets so far today on the volatility markets. I wanted to show you this because I think it's important looking at the context of where we are. And you can see, if you look at what's been happening here, 2 days in a row of declines, indicating that people going back into risk assets, which are the reasons why we saw the FTSE 100 up at 8,000 plus. I'll show you in just a minute. But in today's session, you've got a little bit of a green candle, a little bit of wariness as we see this market pull back. There's a lot of things going on in the markets so far as things are concerned. One of the areas of worry is the fact that China doesn't seem to be expanding as much as many had been expecting. But anyway, look, let's take a look at what's happening here in London first of all, and send the poppers up, because record high 8,001.3 in the last 24 hours. If we take a look at the 30-minute candle, I'll show you where we closed out last night, because I think this is significant to show you precisely where we were at the close last night and where we are at the moment. It is only a fraction down from the close. But you can see this peak coming through last night at 8:30 last night, which is when actually the US markets closed. Then subsequent to that, we've seen this pullback late into the session. A number of things going on here. Concerns about the fact that China just isn't delivering the sort of early sort of growth that many thought they would do post the COVID lockdown. What went on in China, with China now allowing people to move around more freely. So that's not happening. And concerns about hot inflation in the States. We'll take a look at the UK inflation, which is coming lower than expected, but look, it's still racing away, which means that central banks still have their foot firmly on the pedal for interest rates. So we are expecting a slightly lower start here in the London markets. I want to show you what's happening on the European continent. Same sort of price action. You got that rise yesterday, pullback, red candle today, indicating a lower open on the German markets. Same sort of thing going on in France. Although that being said, yesterday we had a new higher high. And I want to show you this. Look at this. We're now as of the high point yesterday, we're now just 1.55% away from a new record high on the French CAC 40. We've got a red candle today, so we are expecting a drop at the start, but we're not too far away from those highs that we saw back on the 4th of January last year. Those record highs, that peak we saw, that head and shoulders pattern, which unwound so spectacularly, taking us below the 6,000 level. Here we are at 7,200, and the market's still on the way up, despite the fact we got a little bit of a drop at the start of the day, expecting a lower beginning on the session in today's trade. Just want to wrap what's been happening in the markets across the Asia-Pacific region. You can see here the Nikkei 225 down on the 24-hour markets. Let me just tell you what's been happening on the overnight performance. We were down 1/3 at the close on the Nikkei. We're currently down almost 0.9% on the 24-hour market. So the downside beginning to build on the Nikkei 225. As far as Hong Kong is concerned, we are trying now to test this line of support that I've got in here, which was the line of 20,680, which was the point I drew here where we had that shooting star candle there, which saw that drop that we saw all the way down to the lows back in 31st of October. So that was established, that line was established back in August last year. And that line of prior resistance, now support, acting quite nicely. The market's being held up at that point. We're currently trading at 20,746. This drop that we've seen in Hong Kong, the Hang Seng Stock Index, I think just measures what people are now seeing in China coming through. And they're saying that they're not getting the evidence to suggest that China is rebounding as much as had been earlier expected. A 1.28% drop on the 24-hour markets on the Australian benchmark. We were down just 0.75%, I think around about that, on the cash session today. But you can see big declines here, taking us now down to levels not seen there since the 13th of Jan this year. So negativity across the region, across Asia-Pacific markets, across Wall Street pretty much as well yesterday when all was said and done. well off the highs. This is the S&P 500. This rising line of support still in place. And if you're long on this, and we've been talking about this for a while now, your stop goes underneath the underside of this. You won't have been stopped out yet, but nonetheless losing money over the last 12, 18 hours or so. That drop in the US coming very late in the session last night, looking as though we could well open up with a little bit of negativity as things stand there at the moment. MACD pointing down now for a second day in a row, indicating that there is potentially this pickup on the downside. The moves on the Nasdaq quite extraordinary yesterday. Whilst we're off the highs, we actually ended up with a green candle yesterday on the Nasdaq markets as things stood at the close last night. The Nasdaq was up 0.5% in yesterday's session, so that was one of the beneficiaries of yesterday's trade. The Dow down 0.5%, S&P down 0.25%. But looking as though we could well see a little bit of negativity swinging through into the US markets at the start of the day's trade later on. Look at the MACD here. I think this is interesting. All of a sudden, you've got a pickup on the downside, the blue line going below the red dotted line, indicating potentially that people are possibly now looking for excuses to sell this market, despite the fact we've seen 2 days in a row of gains, but some negativity creeping in there. I have to see what happens in terms of some of the moves that we have seen there in that particular market. Let's move on and take a look at other areas of what's happening within the world. We're taking a look at what's going on with UK inflation. The numbers out this morning showing a weaker print than had been expected. The headline falling to 10.1%, down from 10.5% in January. We have been looking for a fall down to 10.3%. So that is lower than had been expected. Let's take a look at what's happening with sterling as we report this number. You can see sterling down relatively heavily in today's session. I'll show you the 10-minute candle because there's some other data to come through. You can see quite clearly the point of release of this data where we saw sterling sink against that US dollar. We're far away from any celebration as the Bank of England's target remains 2%. And to get there, the Bank of England is widely expected to continue to raise interest rates. Core CPI, this is without the more volatile elements of food, fuel, and so forth, falling from 6.3 to 5.8%. Now, that was expected to drop to 6.2%. So again, you can see as the fall is further than expected. But the end result of all this has been an emptying out or a selling of sterling against the US dollar. Going back onto the daily chart, you can see where this falls in relation to the recent gains that we've seen. And it's still holding on to this little mini support rally here, third day in a row now, where we've seen this established. It is only a mini supporting line, but at 120.91, we continue to hold above the 120 level, but we'll have to see where things go in the next few days. Yesterday, we saw slightly hot US inflation, which stirred some negativity around in the markets, but this is coming through slightly less than expected, but it's still at 10.1% headline inflation. It's well above that of many other Western economies. So that's where things stand there at the moment for UK inflation. Let's take a look as well at what's happening a little bit later on today. Industrial production in the Eurozone expected to rise 0.3% in December month on month. November had been a 1% figure. So that's interesting to look at from a currency point of view. It's not really expected to stir too much interest, I wouldn't have thought, in the euro-dollar trade. Just to mark what's going on here, currently trading at 107.10. There's not much of a bite on the markets there in either one direction or another. Ahead of all this, sorry, this is all ahead of the US stats later on today. 1:30 p.m. we get retail sales expected to rise by 0.9% in January after a 1.1% drop in December. 2:15 this afternoon, UK time, industrial production forecast to rise by 0.4% in January after a negative 0.7% swing in the previous month. And business inventories and the NAHB housing market index out at 3 o'clock this afternoon. Just want to show you one other area of the foreign exchange market. This is worth looking at. This is the US dollar rising now for a third day in a row against the Japanese yen. And we've now peaked up to levels not seen there since the 6th of January. Now, if you are long on this or want to go long on this trade, let me just draw a line there so you can work out where your stop needs to be. 133.29 is where we are at the moment. Your stop continues to be pulled up under the underside of this rising line of support. So you'll stop at around about the 131.90 level if you're long on dollar. against the Japanese yen, which is beginning to show a little bit of a trend underway. We'll monitor this over the next few days to work out where we're going to go. But if we see a continuation of this rise that we've seen, this is the next stop-off area up here at 137.50, which coincides with the rising red line here, which is a 200-day moving average at 133.84. So that would be your price target if you're long on this, with a stop down around about the 130, what did I say, 130, 190 or so is where your stop would be if you're long on dollars against Japanese yen. Now let's shift on to corporate mode. I want to take a look at what's been happening with Barclays. There's some really interesting headlines actually coming out from Barclays, and they're not all good, unfortunately, but there are some interesting areas to watch out for in the market. Let me bring up the share price chart so you can see what's been happening with Barclays recently. In the last few days, it's peaked up above this line not seen since the 24th of Feb last year. So we're pretty much at a one-year high, give or take a few ticks on the way down in the last few days. Full year group attributable profit of 5 billion sterling. Now, the profit before impairments, and there's been a big impairment, profits at 8.2 billion. Now, that's up 9% year on year. Barclays posting a 19% slide, though, in annual profit after a costly US trading blunder. So group attributable profit of 5 billion. The fourth quarter number is interesting because we're getting corporate investment banking revenue, 2.58 billion. Bloomberg have been looking for 2.77 billion. Some estimates have been slightly higher, so that could well be seen as a bit of a disappointment. So I think it seems like going into the fourth quarter, things are beginning to slow down. A little bit more tough going into the back end of last year, and this is explained by these numbers out this morning. In terms of the fourth quarter, attributable profit was up 29% year over year at 1 billion. The operating expenses were up 6% year on year, and the credit impairment charges have risen £500 million now. The deteriorating macroeconomic forecast, it says, resulted in an increase of charging against credit impairment, partially offset by utilising economic uncertainty PMAs. I won't go into details about that, but I think broadly speaking, this could see a little bit of pressure possibly for Barclays at the start today. We will open at 187.6 for Barclays stock at the beginning of the session today. So that's where we are in terms of Barclays. In terms of support, I've been looking down here at this line here, which was the previous record high we saw on the 13th of September last year, and this line of support back on the 18th of January, that's at 175. That's 12 or so pence below where we are at the moment. That would be our area of support if we do see some downside for Barclays. Good news out this morning from Glencore. Let me just switch on to what's been happening there. We are going to open at 515.3. This is a production statement this morning from Glencore, which looks pretty good. And we've seen a lot of interest, of course, recently in what's going on in the resource sector. And you can see this rising Glencore stock from the lows that we had back on the 15th of July last year. We've seen a nearly 50% gain in overall market value up to the highs we saw back on the 18th of January. A little bit of air taken out of the tyres since. We're opening at 515.3. The company says it plans a $1.5 billion share buyback program starting with a fair immediate effect. So that's good news for Glencore. Let me switch on to what's happening with Dunelm. Dunelm has been absolutely ripping it recently. Let me just take that percentage move up that we had there up to the highs. 87.84% up from the lows we had back in September last year. There's been some movement down recently. Pretty good numbers out, I think, from Dunelm this morning. Tight commercial discipline in the first half, according to the company statement this morning. Delivering gross margins up a touch at 51.1. Pre-tax profit of 117.4 million. Now, this is down 16.6% on the prior year, and it says this reflects the impact of the timing of its sales and the strong post-pandemic demand we saw this time last year. But it also says inflationary impacts are also eating in to their profit line. They have an increase in dividend to 7.1% and a special dividend of 40 pence already declared in that. I'm not sure which way Dunelm will go at the start today, but I think this is worth looking at in terms of the trade. We are trading at 1,166 at the start of today's session. If you see a drop, you've got support at 1,095. If you see a rise in this stock, it will be hard perhaps maybe to beat this line of resistance at 1,239, which was the highs we had back on the 6th of February. So awaiting the open of Dunelm at the start of today's session. ABNB saw a wonderful increase in its share price last night, up almost 20% in extended trade. I should say, sorry, 14% up in extended trade after the company released its fourth quarter earnings that beat analyst estimates on the top and bottom lines. I'll show you what happened with the share price of Airbnb. As at the close of yesterday's session, you can see a massive green candle coming through. We were up and closed at 132.80 at one point at the close of yesterday's session at levels there not seen since the 10th of May. Earnings per share 48 cents. 25 cents was what was expected. Revenue 1.9 billion. We've been looking for 1.8 billion. Revenue for the fourth quarter was up 24% year on year. Airbnb also says it sees continued strong demand at the start of 2023 and is given a more rosy outlook than we had previously expected. So all is contributing to this rise in the stock of Airbnb. Late last night, all sessions on the IG platform expecting a stronger start at the beginning of today's trade for Airbnb when things get underway on the cash session later on. US earnings today. AIG, I think it comes after the bell tonight, $1.29 and revenues of 11.85 billion. I won't show you the chart, but it trades all sessions on the IG platform. Kraft Heinz, before the markets opened this morning, 87 cents on revenues of 7.25 billion. Earnings per share at Cisco expected after the bell tonight at 86 cents on revenues of 13.41 billion. So that's some of the stocks to watch after the close of trade there tonight. I want to show you a couple more charts. This is oil. Down for a third day in a row at 78.09 for US crude. There's a little bit of a disappointment, I think, being read into some of the economic data coming out of China, that it's not stronger. And some are now commenting the fact that the rebound, which was widely expected after China cancelled its zero COVID policy, doesn't seem to be as encouraging as many had been expecting. And we're seeing a little bit of a downdraft there on the price of oil. And spot gold, we are now testing this line of support at 1833. For me, if you get a candle close below there, you're then on the way down to this line of support established back in the 23rd of November last year at 1729. Things are not looking good for gold as things stand at the moment. Currently trading at 1837, just above this 1833 line of support. And that is where I am going to leave you now. But just to remind you, we'll be back at 10:30 this morning with charting the markets. Do watch out for Barclays at the start of today's trade. From my point, and this is not a trading recommendation, I was talking there about the potential negativity in the stock price at the start of the day's trade. Do watch out for that at the beginning of the session today. Could go either way for DNLM after those numbers out, but some encouraging figures nonetheless coming through from the retailer. And Glencore with that $1.5 billion share buyback program. Could that see an uplift in the stock at the start at 8 o'clock UK times?